Welcome to the Finance Village podcast, where we navigate the dynamic relationship between financial professionals, their industry, and the clients they serve in an ever-changing landscape. We open important topics and gather as well as challenge the insights of advisors such as financial planners, mortgage brokers, accountants, realtors, and more. Join us as we delve into the intricacies of finance, the financial industry, and financial professionals, as well as their profound impact on individuals and communities. It takes a village of advisors to take good care of any client, and a village of comrades in this industry for us to see great success together. Let's begin. Okay, welcome to another episode of Finance Village, the podcast that brings you insightful conversations between financial experts and professionals while trying to actually make it consumable for everyone. I'm your host, fisherman's son, reject banker in the family, Sheldon Bro. This is my co-host, Simon Wong with West Cap Wealth and Nick Giovanetti with East Cap Wealth. And in today's episode, we have the privilege of sitting down with a true industry big hitter. And I know a lot of people that are big hitters that have that opinion about you, Preet, is Preet Banerjee. He's not only the founder of MoneyGaps, which is a hybrid advisor platform that aims to make financial planning more accessible, but he's also an investor and partner at WealthScope. He's got a strong focus on leveraging data, and he's got award-winning finance expertise. He's been talking about finance, got a lot of amazing content online for a lot of years now. WealthScope delivers powerful investment and retirement analysis to its clients. And on top of that, Preet recently completed a doctorate, I believe, in multi-dimensional analysis of the value of financial advice. In your face, Simon and Nick. So in this conversation, Preet will share his expertise and insights on full and fair disclosure, because I've been very passionate about that since my younger years. I guess kind of the psychology and emotion of financial planning, which is something I hear you talk about a lot, Preet, and the future of financial advisors in the next era of the industry. And always so many different angles you could take with that. But I'll start with, I saw an old video of you, Preet, and you look like you are one of those people where if you had a kid and you shaved, they wouldn't recognize you. My daughter always seems to like, because I'm going back and forth pretty often. You look like a completely different person when you shave, but still a handsome young stud. So I saw an old video of you that you said, I don't think I could imagine doing one thing for the rest of my life. I've always need to be doing something either different or new, perhaps. And how do you manage all the things that you have on the go? Because you've got more things on the go than I named. I think you're an advisor with Drop, which is a reward startup, tech startup as well. And what do you say to the people? And there's many that always say, "Focus on one thing, you great sinner."
Well, first of all, thank you very much for having me on the podcast and for the kind introduction. I will say that my wife is very much opposed to me shaving off my beard, but I do threaten her with it from time to time. But I agree, I do look quite a bit different. To answer your question, I don't know if this is something people should turn to me for advice in terms of, not having a singular focus in life or their career. I think some people might think, oh, well, you've achieved a certain level of success by putting your hands in a bunch of different pots at the same time. It was never by design. I think this is just, a genetic predisposition that, maybe I have some kind of career ADHD. But anything that is routine, anything that, has similar elements that you kind of put into play either on a daily, weekly, monthly basis, I get bored very quickly. And if you look at my resume, it doesn't make any sense. And I can't tell you there's any master plan behind it. I mean, my undergraduate degree was neuroscience. When I finished that, I went to auto racing school to try and become a race car driver. And then I ended up in finance. And then, from there into, partly into the entertainment world and media. So it's completely all over the place. And there have been some challenges with that. Sometimes I put too much on my plate. So I think the grass is always kind of greener on the other side is the phenomenon.
But you catch that quick, don't you? You how long does it take you to capture that once you see that the plate's starting to spill over a little bit and you got to trim it up a bit?
Well, I don't know. I should have.
I wanted to dive into this because I'm a person kind of on the same nature. And I remember you mentioning in that comment that you made in that video, which is something that I felt that I was able to so much relate to is that because I've got Finance Village podcast, I've got a mortgage company, I'm still involved in consulting complex files, and then really the main focus is pocket finance. But it's they're synergistic. They all kind of makes me love to each other.
Yeah, I think, my MO has been doing things that I like to do, that I'm curious about and I'm passionate about, until I find sort of the next shiny new ball. They are somewhat interrelated. So even, the undergraduate degree in neuroscience, I would argue, has been the most important and valuable thing that I've done, because it really focused on the brain and, some psychology, and that was pertinent to auto racing. It's amazing how much you can learn about somebody diving into a corner at a very high rate of speed, where there's a certain amount of trust that is in that relationship. Turning at the wrong time, braking at the wrong time can cause an accident. What amount of risk are you willing to subject yourself to? What amount of risk are you willing to subject other people around you? So it's actually psychologically very fascinating racing with someone. People who you think you know really well, on a day-to-day basis, once you sort of compete with them in a high-stakes arena, sometimes your perception of their personality can change dramatically. So that's always been fascinating.
The way that you talk about it's neuroscience, was it?
Mm-hmm.
That you took? That's one of those things where, as you talk about it, it feels like one of those things. Kind of, I wish I had my background like engineer. Engineers have a certain way of thinking that they can bring into so many different kinds of. That's more of like a method of thinking, but So I guess what you're recommending is that me and Simon and Nick, in order to really get close as business partners and podcast hosts, we need to do something high risk and dangerous together.
Well, that's only if you really want to truly understand one another. But just circling back to the conversation about being all over the place and how to manage things. My doctorate, which I just defended in, I think it was May, so just a month or two ago, actually it was April. That should have been done like a year or two before, right? So, there is that sort of challenge of putting a little bit too much on your plate. But at the same time, I had a lot of fun, and I still do, doing all the things that I do. And what drives me, I think, is more internalized as opposed to necessarily having more money or having certain accomplishments. I just really want to do things that are fun. And the reason for that is about, I forget how long ago it was, 2007. So what is that, 16 years ago, something like that? I was really ill to the point where I thought I was going to die. And that has a funny way of completely changing your perspective on life. It's ironically one of the best things that ever happened to me. Horrible what it was, and I still have sort of long lasting effects from it. But without that, I would have had a totally different life, and I would have a totally different appreciation of what is important to me. And I think I kind of got that appreciation that I think maybe people get later on in life once they look back and sort of look at their lives and sort of contemplate it. And so that's been a driving factor in my life, is the fact that my perspective completely shifted a long, long time ago.
So has that kind of carved down a little bit of, or is your approach to it different now? Do you take on less?
I think I'm a little bit more strategic about it. So now I do think about any potential project, not so much as how much income is this going to bring in, what's the outcome going to be. Those are important things for sure. But it's how many days out of my week on average is this going to take up? And is that worth it? Is my time not spent on the couch, going to a coffee shop, traveling? Am I taking away too much time from that? The things that really bring happiness and joy in my life. So I'm really about hedonism, is what I'm saying. I'm really trying to increase the level of happiness and spend more time traveling, exploring my hobbies than working.
Yeah, even that tiny little incident where I told you I got hit with my daughter in my arms in the car is just completely like really changed my psychology, where it's like, I really want to enjoy this moment. I really want to do what is necessary. And that's even a big part of financial planning. I think I've mentioned that in previous podcasts. When you're with your family, you don't want to have 70% of enjoyment with your wife because you've got 30% of, you're thinking about money stress and money worries. But I want to quickly touch Simon and Nick, because you guys are also multifaceted, all around hustlers. You got a few things on the go. Why bother doing more than one thing, and how do you guys manage it?
Yeah, no, that's a good question. I think me and Nick have had a discussion about this as well. And, we love being a financial advisors and doing financial planning, but, there's just other aspects of, I guess, life that it doesn't fulfill. I think one of the things that, this year that me and Nick have been working on, which was, our digital marketing in terms of doing more digital marketing for other financial advisors and creating different infographics and graphics that kind of fulfills my need for creative energy. So I don't think it's necessarily money. So what Preet said kind of really resonated with me. I think it's not necessarily by design that we kind of wanted to end up doing a bunch of different things. It's what we ended up doing a bunch of different things because we like doing all those different things. And it just kind of tailwinded into that it happened to make us some money. And I think that's really how we ended up doing a bunch of different things, because it's fun. I like working with my friends. I like the challenge of new projects. And so I wish I could, pre-telling me that he became a race car driver. That sounds something like really fun. Maybe we should all try that one day.
I don't think I could
failed race car driver, I should put it. I did go to school for it, but
would you still be willing to do it today, though? Would you still go and race around a track today with someone?
Yeah, someone gave me a car. Sure.
Oh, there you go. You're still in the game. I'd be too scared to do it the first time, but I think I would be able to drive with somebody else that I had confidence in before I'd do it myself. So, Nick, I mean, it sounds like you guys have actually, I think people sometimes can sit back and see people that take on, a project or two more than they would, can start thinking, oh, the person's not, what are they doing? Or this is scatterbrain. But if it sounds like the way you guys are talking about, there's a level of self-awareness. There's been a thoughtfulness applied to it. You're not just out here just randomly, throwing things on. Nick, wouldn't you say you enjoy the mind shift? I love the ability to say, okay, I've done a lot of work on this today. I've gotten some good contributions, but I want to just shift my mind to doing something different, and being able to shift that mode from, working on that to planning a podcast. It's kind of a nice thing to be able to do for your mind. I feel it's almost like I'm able to take a break from work and still do something productive.
Absolutely. Yeah. I think that we are really in a day and age where we can do fun things like this. Like even we had met a while back when I think I did an Advocates podcast for one of our chapters, and you joined us, and you were telling me that you were even moving across the pond, and that probably didn't impact your business in a negative way. That just opened up even more doors and more opportunities. And I really wanted to dive into that with you as well and say, how different is it on the other side of the Atlantic when it comes to the psychology of money and what people are doing over there, and how does that relate to Canada or south of the border? I find that each country tends to have its own unique spin or take on their finances and how they're building wealth.
Yeah, that's a good bridge into the psychology part. I want to know what different psychology, because I think you've traveled a bit. I always hear that people in Australia love to pay for financial planning. So yeah, tell us a little bit about that.
Well, it's early days for my time here in the UK. So I moved in December of 2022. So 7 months I've been here. So still relatively new, and all of my business is still in North America. So I only recently started business development here a couple of weeks ago. So I can't dive too deep into the particular nuances of or the differences between someone in the UK versus North America. But I think at the end of the day, money is indeed psychological first and foremost. I said before that personal finance and personal financial success is 90% psychology and it's 8% math. And the missing 2% is a testament to how unimportant the math is, because it's really all psychology. And I found that throughout my career when I was in the industry on the front lines working with people. And then when I, gave up my licenses and started working as a consultant, working with different people within the industry, no matter what function you're dealing with when it comes to money, it is primarily psychological. And some of those core sort of emotional anchors that we have, It can be things like fear, greed, regret, overconfidence. These are, I think, pretty pervasive across cultures. There are definitely cultural differences for sure when it comes to dealing with money. I think North America is traditionally an individualistic society, but about 70% of the world come from collectivistic societies. And some of the messaging that we have, and there's been some studies on this, some of the messaging that we have in North America, considering how diverse the population, how there's a lot of immigrants from around the world, doesn't really resonate with a lot of people because it doesn't speak to some of their cultural beliefs, such as being collectivist as opposed to individualistic. And there was a study where, the traditional retirement planning brochure is about a really handsome old couple on a beach with a boat, and it's all about them. And if you go to, I don't know, pick any country outside of North America where having a multi-generational home is the standard, not the exception, where family get-togethers are 3, 4 generations, and in between get-togethers, it's still 3 or 4 generations getting together all the time. For them, really, why would they want to save for the future? It's not for themselves. You want to position the messaging as you save money and invest it for the long term so that you can provide more for the people around you. And that messaging is totally different than sort of the standard North American individualistic society messaging.
I've been
And
talking
so,
about that for so long because there's so many people that come over from and people from North America, they always look at it and talk about it in a certain way. Like there's so many people living in that unit or whatever. But I've always had this admiration for it because it's a beautiful thing. You get that time together with all those different family members. You're humbling yourself to be in that one space, and you're enriching yourself financially. I think it's a beautiful thing that I admire a lot, and I've been thinking about that for many, many years.
yeah. And as I said, there's been, academic papers looking at, what if we went to a company that, um, you know, advertises with these traditional individualistic sort of messaging, and what if we tweaked it to something that speaks more to a collectivistic society's cultural beliefs and values? And so they created these interventions, changing up the pictures on some of these brochures, the messaging around it, and they noticed there was an uptick in savings behavior because you're now speaking the language that speaks to their values as opposed to, again, the individualistic perspective. So I think, when it comes down to the psychological factors and productive relationships between advisors and their clients, I think one of the most important things is really building up trust. And I don't know if we can emphasize that enough. Because if you really want to understand what makes people tick and what they really want to achieve, you have to create an environment where they feel that they can talk to you about these deep, deep goals and values that they have, which they're not used to doing. A lot of people grow up in households where you just don't talk about money. So that can be a hurdle in and of itself. But then to go to that next level and create an environment where people can feel safe to open up and talk to you about what your values are, it's a very difficult thing. You have to understand, we're in the bubble, we're in the industry, and we live and breathe this stuff. But most people aren't. And most people find financial services and financial advisors, quote unquote, financial advisors, as just one uniform thing. And it's intimidating and similar to, what we've seen in, the medical setting. There's disclosure anxiety and there's judgment anxiety. So think about when you go into a doctor's office and you have, some kind of ailment, or you have to show them a sensitive part of the body. There's anxiety that people have when they go into a doctor's office.
Yeah, nobody wants
There's
to show somebody the wart on their butt,
Yeah, there's the judgment anxiety about your lifestyle factors, which play a huge role in our long-term health. And so it's the same thing with the financial services. And I'm sure for medical practitioners, they go to school for this, they talk about it all the time. To them, it's not a big deal. If they see that part of your body, it's just, yeah, this is something that I deal with all the time. It's not a big deal to me. It's a big deal for us because we're not used to it. And it's the same thing for money. So if you go in with that mindset that, yeah, you know what? I really need to go the extra mile to even allow this person to open up, because until I truly understand what it is that they want, and they have to feel comfortable disclosing that, I cannot create a financial plan for them that helps them hit their goals and addresses their values. Up until, your relationship with a true financial professional, people have probably had these very topical, very surface level relationships with the financial services industry. They've probably only dealt with transactional salespeople. And so for them, it's a mindset shift that you have to sort of allow them and encourage them to take.
Yeah, even 10 years in the bank, and I didn't understand the difference between what the bank was teaching me and true independent advisors, which I fell in love with the concept and the free world with which they're able to operate. And financial literacy is not good. I think the G20 countries average is 48%. And if you guys have an interesting story about some one of your situations that you experienced, I actually had a client way back in the day, like 6 years ago, that called me and said they were referred to me to consolidate debt, and they had just bought. I was taking down their liabilities, writing them down verbally, and they had just bought a boat. And I said, okay, how much is it worth? He said 40,000. I was like, okay, how much do you owe? He said 40,000. I was like, well, hold on. It was already a massive amount of debt outside of that, and he had just then bought the boat. And I said, if you just did this, how am I going to explain this to the underwriters that you just went and bought a boat when you have all this other stuff going on? Why did you do that? And he said to me in the most sincere and authentic tone that you can imagine, well, I had to buy when my family outgrew the jet skis. And this is the type of psychology that you're dealing with. Nick and Simon, tell me a little bit about, before Preet gets into it, how do you guys deal with addressing the emotional aspects of financial planning? Because it can feel like you don't want clients to feel like you're pulling them into like a Dr. Phil intervention, right? You don't, because they can feel that way. I actually had a lady that called me, and I've had people use this like 2 or 3 times, where they call and they're looking for advice. They've got some major decision. Hey, I just paid off my truck. They saw that it was paid off. The car company called me. They're trying to sell me a new truck. Should I consider it? Was your truck still running good? Yes. But the thing that was interesting psychologically is she called and she said, I'm not calling to ask your permission, but I want to discuss this. And I've had people say that to me a few times. So there's this kind of, they feel like they don't want, you know what I mean? It's a really complicated thing. What is some of the interesting psychological things you're running into, Simon and Nick?
Yeah, we hear funny things like this all the time, and that's why I'm really looking forward to unpacking ways that we could probably help navigate being financial planners a little bit better, because I do find that it's a constant emotional game where we're trying to make sure that we don't ruffle the feathers too much. We don't make them feel like they're not making good decisions, and then they clam down, and then they don't want to discuss things or talk about things. We want to make sure that we're, in a way, we're helping them like a coach would. If you're trying to learn, like when you were learning how to be a race car driver, your coach was playing into your emotions. They were trying to keep your confidence up. They were trying to make sure that you still had that drive and desire. He didn't want to come down on you and be like, Preet, you suck. Like, get out of the car. Okay, you're no good. So I feel like with financial planning, I'm coming across that a lot. We're more coaching, and we're more patting on the back, and we're more motivating and making them feel comfortable, like you would in your grandmother's house when she's just asking you how's life and how's things going. And you want them to just open up and trust you like that. So from your experience and from what you're seeing out there, what's working, what's not working, and what are some good approaches financial planners could take?
It's a great question. I think we have this idea that everyone should get the full comprehensive financial plan right off the bat. And for some clients, that can be quite off-putting. Some clients, you kind of want to get them there, but it's going to take a longer time. One of the things that I think could make a lot of sense for financial professionals is to just be super candid and say, tell me what you're looking for what is in your past relationships with financial professionals did you not like? What did you like? And let's talk about what the nature of this relationship will be. And then you could even, if I were to, go back and be a financial advisor today, I would definitely put this as part of my process. I would sit down and say, listen, this is going to sound cheesy, but I'm going to give you a pitch. I'm going to tell you about all the things that I'd like to do for you ideally, but then I'm going to tell you about all the different ways that I can help you out. And then let's figure out, what is right for you right now. And if you have a specific pain that you're coming, let's deal with that. And we can put that into the context of a longer, financial plan, a comprehensive engagement. But let's deal with what the pain is right now, because it would be great if you could build a solid relationship with someone in the first, 2 or 3 meetings, which you've got 3 hours. I mean, that's a pretty tall order. So I think you really have to think about not just going in with a certain process that is necessarily going to be right for everybody. You have to think about the fact that people are different and getting them to this ideal state of financial planning process over time, identifying goals, creating milestones, monitoring, review, adjusting. That may not there are going to be some people who are going to be like, yes, that's exactly what I want. I've been reading up on it. I'm looking for a financial planner, and that's great. But I think that's going to be pretty rare. I think education is part of it as well, because I think a lot of people, they don't know the difference between the different types of financial advice and practitioners that are out there. Not everyone provides financial planning. They may not even really know the difference between planning versus here's a very simple, RRSP projection that I put together on one page.
Take this universal life insurance. You're good now.
Yeah, exactly. So, I think having the ability to have that conversation to really level set at the beginning instead of making sort of assumptions could go a long way to building ultimately a better long-term relationship.
Well, tell us a little bit about how you've applied that within MoneyGaps, if you don't mind. I think this is
sure.
the first time to mention that.
Yeah, absolutely. So MoneyGaps, first of all, is really designed to help advisors provide advice to people who don't have a lot of money. And the reason I put it like that is if you think about how the industry is set up, generally speaking, and this
You're not
is a
supposed to do that,
generalization.
Preet. It's supposed to be doctors only. Everybody specializes in doctors.
So I will make some generalizations, but generally speaking, the really good advisors out there tend to be very experienced and tend to have asset minimums that increase over time until you get to a point where, to have a high degree of trust that an advisor is going to be good. If they're dealing with clients who have a lot of money, chances are they're going to be better than the average advisor, just because of experience, qualifications, credentials over time. What that means is that, for the mass market, there's a huge variation in the quality of advice. And this ties into my research. I mean, one of the biggest findings out of my research, out of my thesis, was if you have a lot of money, you're probably going to get access to a better quality financial advisor, and they're more likely to have a positive impact on your overall financial situation, your financial confidence, and the holisticness of your wealth. If you're in the mass market, there's statistically no difference between a financial advisor and a bank teller in terms of controlling for how much income you have, your education, your savings behavior. Once you control for the endogenous factors of the individual, it's actually more the individual that determines how well they're going to end up in the mass market, as opposed to the intervention from a financial advisor, with one exception, and a really big exception. If that mass market financial advisor is providing financial planning, then there is a statistically significant increase in the value that they, or the asset levels and confidence levels and holisticness of the advice that people get. So, and this dovetails with what I think most people who've been in this industry have seen. And that is, here's kind of the acid test question. Anyone comes to me and says, hey, can you refer me to an advisor for this person? I'm like, I'll do my best. And they said, yes, they have $100,000. Can't help you. Right? It's very difficult to say, oh yeah, if you just go here or here, you'll be fine. someone comes to me and say, yeah, I've got someone who's got $2 million. Do you have it? Yeah, I got a Rolodex full of high quality financial planners that I could send you to. And that has been one of the biggest problems with the industry, how it's set up, and the access to advice that people have. So MoneyGaps was created to try and bring more holistic, more standardized, and quite frankly, it's kind of like financial planning in a can. It's very basic, but for people who have basic situations, wanted to increase the quality of advice that they're getting, because the quality of advice for the mass market is just all over the place.
But a great tool for mid-market advisors, because I know a lot of mid-market advisors and they're always exploring different things. So Simon, I'm going to start with you on this one and then jump it over to Preet. I'm a big free will versus determinism conversationalist. I'm big on that conversation. Personally, I'm a believer that there's a massive amount of determinism, and then we get a little fragment of free will here and there that we get to act on or neglect. In finance, Simon, do we have, and just to be clear, we all know what determinism is. Sorry, I will quickly explain that for the audience. Determinism ultimately means, and somebody correct me or expand if I'm wrong, that you're really just an output of your experiences, almost like a computational robot. You're taking in the experiences from your life, and you don't have any choice in what you do, how you act. Everything that you say is predetermined just by your experiences, and it's really just a computational output of your experiences. So do we have free will in finance, Simon? And then we'll jump over to Preet for this, or are we just purely programmed to be what we are? And certainly we know that there's a lot of what we grew up with in our families. One of the things that I shared on an earlier podcast that I had to get permission from my mom to do is that single mom growing up, parents divorced when I was 2. We were constantly borrowing from family members. So in my early 20s, I totally thought just borrowing money randomly from friends and family was like a normal thing to do. Are we able to really get out of that, or is there just we are who we are, in your opinion?
Yeah, no, I definitely believe there's free will when it comes to money. I think the issue with a lot of clients and a lot of individuals out there is just there's just a lack of financial literacy. They don't know what to do. They don't even understand what kind of questions to ask typically. And like we were chatting about before, they're not very comfortable sometimes revealing their money issues or some of their concerns. And I think that's actually a real skill set that a financial advisor has to have, is to have that empathy to be able to ask those questions in an effective manner and be able to dig and recognize when the client's uncomfortable, recognize when there's a problem, recognize when there's a lack of literacy there, and do it in a manner that doesn't make the client feel bad. And we deal with, especially me and Nick, we deal with some very, very smart individuals when it comes to their own specific small business where may have been very successful in their specific niche. And they know, they're engineers, they're professionals, they're doctors, and it can be very hard for those type of people that are very used to, knowing what to do, knowing exactly how to deal with problems, to come out and admit to say, I'm not comfortable. I don't know what's happening. I don't know where to even start. And I think that is a real skill set for a financial advisor to have, to actually get that conversation going, because again, clients don't even know what to ask, where to start to fix their problems. And they don't really know how to quantify those problems to us. And I think a lot of times me and Nick, we tend to try to do a lot of our more high net worth complex cases together, because what ends up happening, I've especially noticed this, Nick, I don't know if you have, is that when you're talking, I'm watching the client and trying to see if there's issues that come up, or if they're not sure about something. You kind of
watching for the micro reaction, are you?
Yeah. And same with Nick. When Nick and when I'm talking, Nick can catch a lot of things as well. And I think that that the key to making sure that the client gets to where they actually want to be in life and in finances is just really trying to really help them quantify what they actually want, because that's number one. I don't think a lot of clients, when you ask them, and you'd be surprised, when one of the first things we do, we spend probably an hour a lot of times, me and Nick, with a lot of our clients, and we sit down and ask them, what are your actual goals? what's your values? What's your attitudes towards money? And a lot of times they're like, I've never been asked that question before. They've never been asked that question. So it's just it's an interesting, it's interesting to me because I always think to myself, well, if you're trying to, go from point A to point B, how do you get to point B when you don't even know what point B is, right? So
Preet, do you think that people are fairly reprogrammable? Can we really, out of 100%, if 100% is a total 180, what can we really achieve? Now, let's assume again that we've, 25 years take as the controlled environment for this question. You've had a certain experience for 25 years. With the remainder after 25 years, what percentage of out of 100 can we really, and there's also financial therapists out there. I've seen, now there's not many. I think I got a few in the States and like a couple in Canada. Are these people that you would look at bringing into this type of conversation? Like, how much can we actually change people's psychology on money as professionals?
Deep. This is deep. I'd love to hear your thoughts on simulation theory and whether or not you think we're living in a simulation or not. But I feel like you thought about it.
Guy. I'll go there with you all day.
I thought you might have. Well, there's a couple of things. It's interesting that you pick, 25 years, the first 25 years. I think, if I remember correctly, the frontal lobe doesn't fully develop until we're 26.
All right.
It doesn't fully develop. Pardon me?
Until you're 26?
Around that. I forget the exact age, but it's around that, mid-20s. Okay. And if you think about it, that's the part of our brain. If you think about, our brains, the further back you go towards our brainstem, the more sort of primal it is. So our brainstem is where you'll find the control of like our heart rate, our breathing, our swallowing, just like the really basic sort of life functions. And the further you get towards the front of your brain, the more advanced sort of the functions are. And it wasn't until late into our evolution that the frontal part of our brains develop, which is most important for long-term planning. And if you think about, 99.9% of our evolution, all we had to do was survive until the morning, right? We are basically hardwired to think short term. And money is nothing but long-term trade-offs, right? Every choice we make is a choice between something today and something tomorrow, right? And money is really about long-term trade-offs. And so, we're not hardwired really to think about the long term by default. We can do it. If we sit down and think about it, then we engage that frontal part of our brains and we can come up with, our executive functioning and long-term trade-offs. And that could include knowing when or having the impulse to find someone to help us with it, whether it be a financial advisor or what have you. So just from sort of like an evolutionary biology perspective, it's a tough question to answer. There is, I think, quite a bit of genetic predisposition. Our early life experiences, I think, have been shown to have a big impact on how we think about money. Specifically in my research, I did ask respondents about their early childhood experiences. The level of financial security in their household, the level of communication in their household. And there was a positive correlation between degree of communication when they were growing up in the household that they grew up with their decision-making later in life, financial decision-making. So that was good, which basically says, yes, if you have kids, you should talk to them about money. Have them open to talking about money. Don't make it a black box or something that, is a taboo subject. You want to encourage questions and talking about it. That's very important. The other thing was there's an inverse relationship between childhood financial security and their financial well-being later in life. And basically what that means is if something really bad happened to your family when you were a kid, that leaves a pretty indelible mark on how you think about money in the future. I've heard, I forget who it was. I was at a conference and someone was sharing the story about one of the most ingrained memories they ever, that they carried was when they were 13 years old, they were in high school or something like that. And they were sitting on the couch at the end of their driveway because their family had been evicted. And they remember seeing friends in school in a car driving by, looking at them through the car window. And just the shame that he felt at that point about, not having a place to live and being evicted. That basically defined the rest of his life, because the rest of his life was all about making sure he never
I'll never
felt that
feel
way
that way
again.
again.
Right. And so early experiences certainly play a big impact. But I think Simon really hit the nail on the head. And that is, in order for people to, you know, make choices about or to be empowered, they need a basic level of financial literacy. And financial literacy, I think, is generally described as the ability to make informed decisions about, resource allocation, and the ability to figure out how to make choices about financial situations and what have you. And that's true. But I think there's also kind of like a financial advice literacy that's lacking. And that people really don't have the literacy levels to really understand and get the most out of their financial advisor relationships, which includes knowing when you're just dealing with a salesperson versus dealing with someone who is, being transparent, fair, putting your interests ahead of their own, even if they may not be required to by sort of any regulation. So financial advice literacy, I think, is actually something that we need to think a lot more about. And in terms of a financial professional thinking about it, it underscores the importance of education for your clients. And again, putting the client into, I guess, a headspace to understand that they can ask questions and there are no bad questions for them to ask. And a lot of them don't feel that way. They feel, and I'd love to hear your experiences with this. You're in a meeting with a client, you're talking about, I don't know, their financial plan, you're talking a little bit about their portfolio, they're nodding their head, and they might be a little bit afraid to admit that they don't really understand 100% of what you're saying. And I would bet that within a week they have maybe 10% retention of what was said in that meeting. And that's a real issue, right? And so you have to make sure that clients understand that is going to happen. And therefore, here's what we can do about that. Always ask a question. Don't ever fear that you have a dumb question. Here are some resources on my website that kind of go over some of the base concepts that we talk about from time to time that I know like the back of my hand. But for you, you hear it maybe twice a year. And so it's always going to be a little bit new to you. Here's some resources where you can sort of brush up on that stuff if you feel uncomfortable bringing it up in a meeting or what have you.
That leads into my next question perfectly, which I'm gonna jump over to Nick to start that and then go back to Preet. I'm first going to mention though, and that's very interesting what you talked about, that at 20 that we not focused on, and it makes sense, historically, that we're not focused on long-term planning, and not just long-term planning in the decades. If you're in your 20s and you're before 25, at least this is how I was, and I've had a lot of conversations with friends. 2 weeks between paycheck to paycheck is long-term planning. It's a surf and turf on payday, and ice cube soup the day before payday, right?
Yeah.
So, there's two famous words that would always come into your mind on payday, because one of those simple things that is a big part of financial planning is, are you taking a lunch or are you buying a lunch every day? And you get paid, and you're always buying lunch on payday. It's just the two words that go through your mind always. I've had this conversation with so many people, is F it, I deserved it. I mean, you're going and you're getting a fancy meal when really didn't need to. But what we were just talking about, and I want to hear you start with your thoughts here, Nick, is there's just giving the basic information. So there's that level of literacy. And then you want to get into suitable disclosure. And that's even more complicated. I used to be, in my, younger zealful years, and I'm still full of zeal, but less ignorant. I thought I was the greatest guy because I'd be going on and on about all these things about mortgages and giving them all, and their eyes eventually just glaze over. And it's like, bro, did you get it approved? I'm not interested in all that stuff and how to pay it off faster and da 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 da. So I was really passionate at an early age. I started out in the call centers of CIBC. I saw that in the big banking world, I would have liked to see significantly better full and fair disclosure. Sometimes we would see it in a code of conduct as a mandate, but then you don't necessarily see this coming out all the time in policy in some of the big banks. How do you deal with the things that you have to disclose, Nick, and putting it out in a consumable way, and trying to find those right nuggets to give them at the right times, right? And that's even a big psychological game there, Preet. You got to judge, okay, is this person in a mindset today at this moment in this meeting to consume this much that I plan to do, or am I noticing that they're a little off and I'm seeing some micro expressions? They look a little bit, they had a type of a day and I need to tone this down a bit. So how do you measure that, Nick, the amount of information you're giving at each time and making it consumable for them?
It's such a hard balancing act. And I'll say, relating finances back to healthcare, I think there's such a strong link between how they do healthcare today, the knowledge around healthcare, and it's becoming more of a longevity play when we think healthcare. Why do people not smoke as much as they used to? Because I want to live a long life. I don't want cancer 30, 40 years from now. Why do we live a healthier lifestyle today is because we're thinking about the future. But it wasn't always like that. Preet mentioned earlier about the developments of the human brain and how, farther back it's more primitive. We're just trying to make it to tomorrow. I think we live in a society now where we think about, can we become centurions? And the financial world is, I think, slowly getting there. People are starting to realize, save 10% of what I make from a very young age when I'm 15 and I have that part-time job. And I'm now thinking about when I'm 50, when I'm 15, where I don't think people used to do that. And maybe it's more so in Canada. I don't know if it's like that in other parts of the world. Preet could probably speak to that better on what he's seen. But I would say between disclosure, we have our regulatory musts. We have to disclose things. Does anybody read it? Probably not. So it's more of we're disclosing it, but it's pretty much them just getting a piece of paper with a whole bunch of words on it and they sign off on it. And if it ever came up later down the road, they're not even going to remember that we discussed anything around the disclosure piece. But the education piece is an interesting one because we can over-educate and completely mind scramble them to the point of analysis paralysis. So they don't even implement strategies because they're still trying to understand how you're making the cake. And I feel like that balancing act, I would love to hear Preet's take on that. And I almost think that the financial world really drew in brilliant minds. They were so good at math. They could calculate out things and, probability this and super complex math that. That's actually not really the ideal financial planner, I don't think, for most people. Those are the people you want as part of your overall team environment. You want those brilliant minds as part of the team. But the customer-facing planner is probably somebody more with Preet's background. They understand psychology and the human mind and how to speak to people and get them to move with words, not so much, look how smart I am in this fancy math that you could never figure out. So just trust me and do what I say, right? Preet, I'll pass it to you.
Yeah, I think those are really good insights. I'm trying to remember this anecdote I heard. It was a long time ago, so forgive me if I get the details wrong, but I think it was Stephen Hawking, famous physicist, astrophysicist, wrote a book on theoretical physics that sold millions upon millions of copies around the world. And the story, if I remember correctly, was when he was, writing the book, his editor said, listen, for every formula you put in that book, have the audience, right? So if you put in 2 formulas, then take half, multiply that by half, right? Every formula you add is going to kill the audience by half. And so apparently that's why the only formula in that book is E equals MC squared. And so there is this balance that needs to be found between detail and simplicity and communicating complex matters. And you could argue that, that book talking about advanced theoretical physics did a really great job of helping the layperson to understand the basics of astrophysics. Like, it's a phenomenal book. I am not an astrophysicist. I'm not even a physicist, but I read that book and there's still stuff that I retain today. So trying to get that information into a digestible format is a very tricky thing to do. There's a reason why there aren't multiple books about astrophysics that have sold many, many millions of copies. There's another study that I'm a little bit more familiar with. I think it's affectionately referred to as the tyranny of jam. And essentially, it has to do with the paradox of choice and how too many options can sometimes paralyze people into inaction, which may ultimately be the worst option. And in this experiment, researchers went to, I think it was a grocery store in Southern California. They set up these jam tasting stations. And initially they set it up with 6 different types of jams to taste. And people were allowed to sample as many as they wanted. And then they were free to either buy or not buy the jam. And then the researchers every now and then would change up the station from having 6 jams to 24 different jams. So way more choice. 24 different flavors. People, again, sample as many jams as you want and then make a decision about if you wanted to buy jam or not. And it turns out that for all the shoppers who are only exposed to 6 different jams, they were 10 times as likely to buy jam. And they were also way more satisfied with their purchase, compared to either of those conditions. If fewer people bought when exposed to 24 different jams, but of those people that bought,
satisfied. Help me understand that as a nurse. Is it the like the regret and the
yes, yeah, it's regret. Yeah, it's the regret.
I could have had maybe one of the other flavors was better type of thing.
Exactly. So essentially, what happened was, if you're exposed to 6 different jams, you go to Costco or whatever, you'll probably sample 2 or 3. And you could probably cross off 2 flavors that for sure you don't like. So what you're left with is a very good idea as to what is the optimal choice for you.
Certainty, yeah.
If you're given 24 different options, maybe you cross off 5 that you definitely know you don't like those flavors. And then maybe you taste 5 before you're like, that's enough jam in one sitting. So that leaves you with 14 flavors of jam that you don't really know anything about. And because you're so worried about making not the perfect choice, you don't make a choice at all. And there've been corollaries in the world of investments. And when it came to DC pension plans, forget the exact numbers, but they found that pension plans, like defined contribution plans that gave people a lot of choice, thinking, oh, well, more choice is better, right? Pension consultant comes in, oh, you should have like 90 funds and everything from equity to fixed income, all this stuff. What they found was if you reduce the number of options to like 2 or 3, so you only had basically long-term savings, a conservative savings option, and like money market, the participation rate in the defined contribution pension plan was like 10 or 15 percentage points higher or something like significant. And when you think about the real world impact on having 10 to 15 percentage point more people saving actively for retirement, that's a huge impact in people's lives. And it was all because you reduced the choices, right? You simplified things. So,
well, think about FOMO, right? Like, do you find that FOMO of this day and age, people are making less good choices with finances and more
like crypto?
Analysis paralysis? Yeah, because there's too much option, there's too much choice. And then the consumer, if you lay it out to them too simplistically, another advisor will swoop in and say, look at my complex shelf, you're missing out.
Well, this is the challenge, right? Because you as professionals are dealing with social media influencers who are unregulated, unlicensed, promoting cryptocurrency platforms, NFTs, you name it. Because there is no oversight, there's no recourse. We're starting to see a little bit, but it's still tiny. And so you have that new level of competition, new level of information, and it's very easy for someone to say, here are all the holes. And to be fair, they point out a lot of legitimate holes. There's a lot of legitimate issues with financial salespeople, no doubt about it. But that doesn't mean all financial professionals are bad. So the entire industry gets painted with one brush. Some of that is self-owned. It's been a long time coming for sure. But at the same time, there's a lot of, people in the social media space who are unregulated, unlicensed, who are, doing things that are as bad, if not worse. For example, pitching different coins or what have you. And there's no, like, who do you go to? Like, if you find that you've lost a lot of money, who do you complain to? What regulator do you go to say, hey, someone gave me this horrible advice?
Your mom.
Yeah, you got nothing, right? So it's a very tricky thing. And I think what social media has done, and again, this goes back to some of the findings in my research. I looked at not only the primary channel of advice that people use, but also ancillary or secondary sources of advice. And what was interesting was that people who use sort of a traditional financial advisor, but also indicated that they use social media, did better than people who only use one or the other, right? So there's a complementarity happening with traditional advice and having other sources of advice, which means that people have to be a little bit more discerning. And I think that, financial professionals need to embrace that is part of the new reality. And I think some of the information that's out there on social media, it used to be blogs, now it's, video, short form video, and what have you, is actually upping the game in terms of what people are expecting.
The influencers have done a good job of making content consumable because it's now in that social media short format. And just a quick little plug for Pocket Finance. This is one of the things that we're going to make very interesting in our gamified education hub, is being able to get either the advisor as an improved content creator, or partnering them up with somebody that can help make sure the right information is being put out in a consumable format. Because why wouldn't you want to make that something that it becomes more edutainment? I'm learning by accident because I want to watch this. Again, I'll shout out to your YouTube channel, Preet. I think everybody, financial professionals and consumers, should be watching it. It's just really easy to follow, easy to understand, a lot of latest things that are happening. And you guys talk about, product. That's one thing. That's a one level of disclosure of complexity that you have to go into. And then you've got to talk now and help them understand how you get paid. Have fun with that. So quickly talk about that for Simon. I know me, you, and Nick, there's so many people I've tried to refer you, and people are always kind of wondering. So Simon, how do you have that conversation? What are some of the kind of hiccups and pains and ways that you maybe get around those, and then we'll go into Preet for that as well, because comp is a big one. And I know that Preet, you and Jason Pereira are both great advocates for full and fair disclosure. You actually have a page for any conflicts of interest in your life that your people are able to go to your website and see, or at least you did at one point. When I went and saw, and I was really taken back, because I was like, wow, like this is like really being completely transparent. So what do you think about explaining comp and conflict of interest, and how difficult that is, and ways that you do that, Simon? And then we'll go over to Preet.
Yeah, I mean, we're, especially on my end, we're fee for service planners. It's a lot more transparent how we get paid. And when you can sit down with a client and say, I get paid like an accountant, I get paid this amount of money per an hour, and this is how many hours it's going to take me to complete my work. It's a lot easier to be transparent. And usually within the first meeting, we kind of chat with them about it, and we get them to sign off on engagement letters before we even start working with them. And it's a little bit different, I guess, when you're working, say, with an insurance agent or an investment advisor, just because obviously, especially when it comes to insurance, the commission's a little bit more convoluted and much more difficult to explain. Maybe with investments, a little bit easier at the end of the day. But for me, I find it actually quite easy if you just do it right from the beginning. It's part of your package that here are my services. Here's what you get for my services. Here's the fees that we're going to charge you to complete everything. This is the amount of hours is we're going to get. And I think if you're really upfront right from the beginning, I feel like a lot of clients do appreciate that, because at least then they can make an informed decision of whether they want to proceed, right? I think the worst thing that can happen is if you don't tell a client about all these different fees, and then they find out later on, that's when the relationship is, it's very damaged, because they feel like they've been duped a bit by you, right? And even when it comes to insurance, again, we're not insurance agents. Sometimes we'll need insurance to implement some of the planning and tax solutions. We try to be as upfront as possible with that, with a lot of the clients as well, because they have to understand that, at the end of the day, if they're not comfortable doing it with us, or not comfortable going with the solution, at least I can say that, we were upfront with you. We told you exactly how it is, and I can sleep at the end of the night. But unfortunately, a lot of insurance agents aren't really, I would say, probably, and I don't, I haven't done a study on this, but I would say probably 95% of insurance agents do not talk about how they are compensated with their clients. And if most clients ever found out, I'm assuming they would be quite upset, actually.
Yeah, I think they would be, especially if they find out commissions on whole life policies and what have you.
I want you guys to agree, and I also want you to address. I'm sorry, I'm always going to put people on the spot for this. I also want a tidbit of your thoughts on MLM in the financial advisory space in combination with that.
Okay, what do we have? Like 1 minute? um,
No, no,
okay. So
we're
first, when it
good for
comes,
about 12 more.
so I think when it comes to disclosure of compensation, I think that people in the industry make it a much bigger deal than it actually is for clients. We've got it built up in our heads that this is going to frighten people if you actually just transparently disclose what costs are for providing, advice and products. Um, and I think most clients are just like, yeah, just give me the numbers. Like, I mean, for example, piggybacking on Simon's example, if you deal with an account and you pay by the hour, it's not abnormal to you. You get it. People have to be compensated for the work that they do. And I think
I think that
Simon hit the nail.
comparison actually sounds a lot better though, because if you just say $150 an hour, people will run. But when you start out with that comparison as an account, it actually makes it like feels more friendlier.
Yeah, I think that's part of it. And again, I think, what Simon alluded to, if they ever feel like they found out something that wasn't disclosed and they feel that you were hiding it, maybe you weren't, but you just weren't forthright with the disclosure, you don't give them their, annual review or what have you, they're going to actually build up this sense of distrust, right? And that relationship is just on its last legs if you are seen to be hiding anything from them. So it's easier for me to say, being out of the industry now, but back when I was in the industry, I guess it might have been a little bit ahead of the time, but I would present with clients, here are the a couple of ways that we can work together. And I was at a big five brokerage. And so there was the traditional sort of commission model. There was the fee-based model, and I was I think one of the few people at the firm that offered fee for service. And I remember when I talked to the firm about offering that, they said, "We don't really have a template for that. Here's one other team that we know that's doing this. If you want some kind of reference point, and then whatever that was, that would then just hit the grid, just like any other a revenue that you generate for the firm." And I remember people in the office looked at me like I had two heads. It's like, what are you doing? You're like disclosing everything and giving people. Now, this was mid 2000s, right? So imagine this is like almost 20 years ago. And even today, fee for service is still seen as groundbreaking, which is crazy. I think
And people are doing subscriptions now too.
I was going to say, I think the next sort of paradigm shift is going to be towards subscription-based advice. And I think that is probably going to make the most sense for tackling the problem of the mass market. A subscription-based fee, and you have access to advice on demand. And it may not necessarily be the same person that you see, depending on the firm and the dealer and what have you. In some cases, it might be. But that's why we have to figure out, scalable quality advice for the mass market. And I think with the advances in technology and AI, that is going to be an easier nut to crack than it ever has been in the past. So we're making progress slowly but surely. And I think a big factor in that is also changing consumer preferences and consumer demand. And their eyes have been opened up to, costs and comparables. And so they're starting to say, yeah, it really doesn't make sense that, product is tied towards compensation so tightly. It's regulation has been lagging behind consumer demand and preference, but it's rare that regulation is going to be ahead of the curve.
Well, one of the things, even on the mortgage side, like, we have, it's similar to insurance because it's commission. You are a distribution channel for these people. I wish that there was more compensation models kind of, changing around the mortgage side of things, because it is tough to explain. And then people think they can negotiate mortgage rates. And if you even take like a molecule of a percentage off your mortgage rate, the commission's gone. So now you can never actually do that. But when we're talking about subscriptions, I've seen big fancy firms, because I've talked to a lot of companies across Canada doing it. I've seen some really, really fancy ones out in BC doing it. I've seen kind of individual small advisor doing it. I'd love to be able to facilitate that on-pocket finance someday. Do you think that money coaches, because you talk about technology having some level of solve for the mid-market, which we know, of course, will be true with some level of innovation, but keeping that human involved. Do you think that there is a place for money coaches? I think money coaches are pretty common in the US. I know people that have wanted to become money coaches in Canada, but there wasn't really any, I guess, platform or infrastructure or path that they felt. So they ended up getting a CFP and kind of, doing whatever they do with that. But do you think that money coaches for the mid-market is something that could be interesting, that will be part of the future, or is it going to be all technology, Preet?
Yeah, no, I definitely think there's a place in the future for money coaches for mass market. As it stands right now, I think, money coaches who charge by the hour or project fees, most of them tend to be, project fees in, the thousands dollars of range. There's not as much in terms of mass market access to advice across the board. And it's still a very difficult nut to crack. And that gap, that failure in the market for financial advice for the mass market is being filled by social media right now, for better or worse. And hopefully you end up following someone that is got a level head, straight shooter, knows what they're talking about. But for every person out there that is like that, I can find 10 people who really don't know what they're talking about and could be steering people astray, putting funny ideas into their heads. Because it's, to a certain extent, it's, whatever gets the clicks and the likes and the notoriety, not necessarily what's right and good for people. So I think there is opportunity there. I think that, money coaches or any type of fee for service model for the mass market is going to have to heavily rely on technology to get scale, because in order to reach that market and charge a fee low enough that it's going to be palatable for them, there's got to be some kind of balance. And we haven't figured that out yet.
Yeah, I was
well, even some of the, I'll just comment on some of the credible publications out there now are taking sponsorship dollars to write articles that a company wants them to write. Maybe the company even wrote that article. So as a consumer, go ahead.
Yeah, lots of advertorial content, right? As opposed to pure editorial content.
But to the consumer, it looks like it's real content.
Yeah, it's almost deceptively too similar to what's supposed to be objective sort of journalism, right? And I think that's a challenge for legacy media industry. I mean, we just saw what Torstar and Post Media are in merger talks right now. I mean, traditional media has been in a death spiral for a long time, and they're trying different ways to get revenue. And it looks like one of the casualties of that is that we have a blurring of the lines between sort of objective journalism and advertorials.
And sorry, I'm going to make you give your 20 seconds on MLMs within the financial industry. Is this a good thing for us? Is there a model for it? Can it work, or is it just it keeps going wrong and it needs to not be there?
Oh, we'd be much better off without MLMs in general.
Especially within finance, I suppose.
Yeah. I mean, listen. I mean, I guess the telltale ingredient is if there's too much emphasis on recruiting as opposed to the service or product, right? When you have these MLM structures, that seems to be the delineator between, because there are to a certain extent, the MLM structure, multi-levels, branch managers, regional managers, that exists in dealerships as it stands, but that doesn't necessarily mean that it's, just about, recruiting people and the people are the product as opposed to the service being sort of the product that's out there. But I think we could all sort of pick on, the MLMs out there that are really all about, they kind of downplay the product and it's all about the opportunity to be a part of the MLM.
Yeah, that's the other one I'll say is not just the recruiting, but the money focus, the money. There's this culture that it becomes almost like this kind of unhinged. There's always a mutiny. It's an interesting culture because I've never been in an MLM. I've tried to be recruited there a million times. You
have to listen to one of my podcasts. I don't podcast anymore, but I had a guest on who talked about his journey of leaving an MLM and how people in his community,
like leaving a religion.
People in his community turned on him, led him to depression, all this. And he was on the record about everything. It is such a worthwhile episode to share with people, to really shine a light on what it's like inside like a true big MLM. It's
Are you going to
really
send me the
eye-opening.
link, or what do I search to find it?
I'll send you the link. Yeah.
Okay, please. Simon, Nick, and I actually bonded over a weird experience at a place that pretended they weren't an MLM, but were super MLM-y. The leadership had been like 10 generations deep on MLM, and they were just so ingrained in that. And I was going to mention earlier, like you talk about the recruiting, that is a big part, but the money obsession. I believe when you do something awesome, and I think this is what kind of shines through in when we're taking on our multiple projects that I know that people like all four of us are doing, is you want to do something beautiful and awesome and something that you enjoy and something that's creative, and money will come out in the wash typically. When you focus on the money, you end up getting a little bit funny. And yeah, me and Simon and Nick had a pretty interesting experience at one. You know, you hear these stories about Scientologists, or like Tom Cruise, where he's like screaming at somebody in the back room, when we kind of met through that type of MLM entity, and then quickly ran in the other direction, but joined arm in arm and got the podcast and doing these things now. So we're going to end on.
They do a great job on community, right? They really bring people in and make them feel like they're a part of something. And I think that is something that the rest of the industry should learn from, is that open arms, welcoming community aspect of their organizations, and the freedom of speech. They can talk to these people that they call high level leaders and whatnot, openly and freely without passing judgment. And I think that's a great thing. I know any conference I've ever been on, when I can get some time with some of the high level leadership on more of just, we're wearing shorts and t-shirts, having a coffee or a beer somewhere, it brings more community to what it is you're doing and where you're doing it. So I think that we can learn a bit from them.
I'm glad you brought that up, because I want to share a quick story with you guys. I had a lady who I was just trying to get her a mortgage, but she had kind of, mid-market, anybody that they trust, they'll kind of adopt them as I wasn't trying to be her financial advisor, but she would call me with like additional non-mortgage things, and I would try to help her. And I was trying to guide her towards getting qualified for mortgage. And she was in one of the MLMs. I think it was like one of the candle ones or something. And I was dealing with her and her husband. And I said, listen, I looked at their she had lost like $250 a month for like 8 months. No, there's nothing coming in from it. And I remember I said, I think that you should consider shutting this down. It's just you're spending money on it every month. And she said to her husband, I'm willing to do whatever it takes. The perfect thing you want to hear from the client. I want to do whatever it takes for the benefit of our financial future. Her husband came back on the phone the next day and said, I don't want her to give it up. I've never seen her so happy because of the sense of community she had. This is what we're trying to do. We get the podcast. We're starting an online community, Finance Village. There's a lot of independent advisors that do want a sense of community. I know a lady that was very successful. She's with one of those, the Hub Financial Horizons, PPI, kind of one of those big, well-known ones. She wanted a sense of community so bad, she went over to one of the MLM ones, was absolutely traumatized beyond belief, and ran back to the other one. And when she tells this story, I'm telling you, she's red in the face, like the experiences that she had with the way that they motivate. But we'll finish on two quick things. And I'm going to go Simon, because I want you to share your quick thoughts on this, and then Nick, and then I want you to actually maybe bring us a little bit more insight from your thesis, Preet. Share some insights on your research of the value of financial advice and its impact on individuals' financial outcomes. You've given us a little bit of insight into that, but really my main question I want you all to focus in on, starting with Simon, then Nick, and then Preet. What is the simplest way to convey, or how do you convey or quantify the value of advice from financial professionals to a client? I know that there's only one really I know that I've heard, and I think it's like one of the dealers or something put it out, where it's like you can get 2.5 times your wealth by the end of your life type of thing on finance. But that's really the only thing I know how to say to it. I'm the biggest advocate, and because I'm not an actual financial advisor or planner, and I'm not even a mortgage advisor anymore, I just consult on complex files. My business partner takes care of all that. How do you guys communicate the value? And I'm the greatest advocate. I want to be able to advocate for financial planners harder than anyone, and I'm doing it from a non-biased position where I don't do it. I'm saying go and do that with these people that do it. What words can I use, and how can I convey that?
Yeah, no, that's an interesting question, because I mean, there is multiple ways that I think we do it, and a lot of times you have to, because different clients will respond to different I guess really to different comments, because some clients, all they really care about when it comes to value is, here's what I want to achieve, here's how much I want to spend in retirement, and if we can show them that they can spend more money than they thought, and we can show them methods to do that, that's easy to convey value, right? But then you run into the engineering client and he's like, I want a specific number to what you guys are providing, and we can do that as well, right? We can show them like, hey, here's what your estate value is going to look like without any advice. Here's what it looks like with our recommendations, and you can quantify that for them. But again, I think when it comes to really communicating value, it's going to be different from client to client, and you're going to have to tailor your approach, because some people, they don't care about the numbers. Some people, they just, at the end of the day, they want someone to tell them they're going to be okay, and that we've done the calculations. They don't actually care, I guess, per se, exactly how it's done. They just want the end results. And a lot of times I think our value is just saying, we're going to give you peace of mind, and we've ran the numbers and everything looks good for you.
So basically the summary of what you're suggesting is use AI to create a deep fake of the person looking older, sitting in a lounge chair, shooting one of those money guns. But for some people, as the money's coming out of the gun, you got to show the number accumulating so that they have okay. Nick.
Yeah, I would definitely say that there's so many different money mindsets out there. There's different things that make people tick, different things that they care about. And I just keep relating it to healthcare. I mean, some people, they only want to meet with a family doctor a couple times over a decade, and they're fine. They're like, you know what, I do my own research. I know how to eat. I'm comfortable. I'm fine. Other people want to go to the gym. Other people want a personal trainer. Other people bury their head in the sand for a little while, and they pop up for air every now and then. So I think that finding for planners out there, you got to find the type of people that you resonate the best with. And that's what's great about this industry, is you can shop around and find planners you resonate with. And Simon and I, we do our best to show value and quantify it as best we can, but we're also not afraid to say, I just don't think that we're the right fit for you. I think that what you're looking for is not what we can provide. We can, give you a few recommendations of some people that you can interview as well, and maybe they're a better fit. So I think that when you remove the product commission piece of it, we can really get to good quality advice, and people can find somewhere comfortable that they want to work with. So what I would say to you, Sheldon, is don't say the money gun thing. Say wherever you are financially, if you want to have personal trainers, or you want to just touch base with a family doctor every now and then and have a checkup, there's different planners that are going to be able to help you at whatever stage you're at, and shop around and find those planners.
Whatever stage you're at. Okay, I'm going to implant that into Preet's, because I need a little bit more insight of that, because this has always been a great question for me. When is the time? Because when I'm building Pocket Finance, I was like, okay, for the mid-market, this is a great tool that clients can use to navigate some simple things, provide them some meaningful stats until they are at the point that they need a financial advisor. So I guess it's going to be kind of an all-in-one here for you, Preet. So when does that transition really look like for the mid-market to now I need a financial advisor? And it's not just self-employment, because even plenty of people that are self-employed in their early stages or even successful don't have a financial advisor. And how do I convey how do I simply convey or quantify the valid advice to a client?
A lot to unpack there. So I think to address the first part of the question as to when is the transition from sort of commoditized advice, mass market advice, to something a little bit more bespoke. Generally, that centers around some kind of...
And is it attitude or money? Or both?
I think they're related, and it has to do with financial milestones or financial transitions. Something that spurs people to think, okay, now I need to start thinking about this, whether it is, someone has died and they're receiving an inheritance, or they're having their first kid, or what, something that is going to change their mindset from the status quo, which we tend not to want to deviate from. We kind of we have inertia. We keep on doing what we're doing until something changes. Now, something can change your financial situation. Something can change your attitude. Like, you've hit 45 and I don't know, you see the stats that the average age of a critical illness is 41. You're like, and then you start to see people around you having heart attacks, cancer, stroke, or whatever. And like, all right, it's something, you need to maybe do something about this. So that's an attitudinal shift. So again, I think it has to do with some kind of milestone that's going to spur people to change. I don't think people just wake up one day and say, yeah, I guess I should maybe engage in this. There's what's his name, Josh Lichtner, I think it is. He talks about when he looks at different startups and whether he wants to invest with them as an investor. He tries to quickly figure out, is this company or this idea, is this a vitamin or is it a painkiller? And his analogy is, vitamins are a tough sell. People kind of aspire to, I want to live a healthier, better lifestyle and what have you, but they're much more discriminatory about price. They want a good deal and what have you, and there's no sense of urgency. They're like, I'll get to it if I don't pick up vitamins this week at the grocery store. But with painkillers, let's say you're on vacation, you've got a splitting headache, it's 2 a.m. You take an Uber, spend $50, go to a gas station 20 miles away that is overcharging like $20 for 8 pills of Advil. You'll pay that. You're price indiscriminate and you're willing to pay for that painkiller. And so I think it's a great way of thinking about, how do you sort of tap into what people want? Are you just trying to sell them on, well, I can make things just incrementally better for you. It's a good thing to do to have a financial plan. Or are you addressing, hey, is there a pain that you're coming in? Is there a reason why you're in to see your doctor today? Right? That's trying to alleviate that pain is what I think is going to help people capitalize on that potential motivational shift. Now, with respect to, the value of financial advice, let me just put in my 2 cents on the research design and why I think it's important. I think historically, a lot of the talk around the value of financial advice has kind of painted people into these binary situations where they're advised or not advised, right? And people either do it themselves or they use an advisor. And then people come up with their perspectives on the value of advice. And what worked for me didn't work for the next, whatever it is. So what I did was I tried to differentiate the market for financial advice because not every financial advice provider is the same, right? So that's one big issue in, I think, a lot of the literature. So I actually carved the market up into 18 different types of financial advice that consumers could get. So differentiated the market for financial advice, controlling for different types of advice that's available. But in addition to controlling for the difference between channels of advice, I also controlled for the differences within channels. So there's sort of an intra and interchannel sort of differentiation of advice. And then on the individual side, the consumer side, also add in a lot of controls for basically realizing that not everyone is the same, right? There are some people who will do better with an advisor. Some people actually end up worse with advice. Some people who are good. Like? Well, there are some people. There are some people who actually know quite a lot about, managing portfolios and personal finance and do a pretty good job on their own. And they just use a channel of advice for execution. They really know what they're talking about. It's not super common, but it exists. And there are some people who are doing it themselves and will be worse off because an advisor, puts them into products that are higher cost than what they were doing, assuming that they were, had a disciplined strategy.
But those are pretty sophisticated people. Don't let Mike, because I got a few of the buddies that I was just talking to recently that they really think that they're these savvy do-it-yourselfers, but.
Well, that's the other thing. There are people who think they're really good and actually aren't. So
it's not to say they're bad. It's just there's gaps.
Yeah. And so really what I'm getting at is that not every individual is the same and not every advisor is the same. So once you sort of put in the proper controls to sort of say, all right, well, we know that people have different levels of financial agency, different levels of financial capability, different levels of financial literacy, and then controlling for that, see what channel of advice they go to and who does well and who doesn't. What we find is that not only do we consider portfolio-centric outcomes of value, I also considered non-portfolio-centric measures of value. So a holistic gauge of the financial confidence of a household, as well as a measure of the breadth of advice that they're getting. So are they getting advice on more than just investments? Are they getting advice on debt, cash flow, insurance, life, disability, estate planning, and what have you? And the big takeaway is those who are getting financial plans and receive financial planning across all three outcome measures, very robustly showed an increase in those outcome measures when they were receiving financial planning or holistic advice. And to the question of, how do you articulate value? How do you get a client to see value? I think one of the things that you might want to consider is, what is your definition of what the value is that you bring to the table as a financial advisor? And then ask your clients, what do you think value looks like in a relationship with a financial advice provider? And compare notes and have a meaningful discussion about what is going to be meaningful and provide value to you where you are in your stage of life and the needs that you have identified. And if you don't talk about that, I don't know how you can articulate value. You just can't assume everyone wants a 50-page financial plan. We know that's not the case.
That's pretty damn good advice, actually. Pretty damn good advice on that question. I'm going to end with one last combo question for you guys, and we're going to go. We're going to finish with Preet. So Simon, Nick, Preet. Two quick things. Number one, you're 25 years old. You know everything you know now, but you're going back in time to 25 years old. You're tasked with becoming the greatest financial advisor ever. What thing? Just give one piece of advice on what's most important to give to yourself so you make sure to succeed. It can be, hey, MoneyGaps is that technology for you to be able to go out and make it accessible for all your people, make it simple, whatever it is. One piece of advice. And also, now that they have blue collar boxing, which is a thing here now in Canada, how long do you think it'll be before Jason Pereira ends up boxing somebody up in finance from Twitter or LinkedIn? And should I box him? Because even though I'm not a martial artist like he is, I can jump over a picking table while catching a football. Simon.
Yeah, no, that's interesting. If I was to go back, I think, and again, the answer is going to depend on each person. But obviously, I think when I was younger, my huge focus was obviously education, learning more, and obviously, I think that's very important. So my answer is going to be that if I was to go back, I would have spent maybe a little bit more time in terms of building out better relationships, better networks, and just kind of having that, building that family around me, like, with you and Nick, and just having that community a little bit more, which was never a focus of mine until my late 20s. Before that, it was just like, I can do everything on my own. I can learn everything on my own. But, what I've realized is that, even if I could, it's just not as fun, right, without the right people around me. So I think if I was going to give someone a 25-year-old advice, build the right team around you.
That is fantastic advice. And who you putting your 10 stacks on? Is it me or Jason?
You're pretty big, so I would put it on you. I think I'm assuming you got like 5 inches.
Too chubby to knock over.
Yeah. Yeah.
Okay. Thank you, Nick.
Yeah, Simon. Simon's answer was perfect.
Advice, though, Simon. I think that's really, really, really meaningful advice. I think that's probably some of the most, because it really is so much more fun when you got a good group of people that you trust around you.
Absolutely. Yeah. Build your financial professional table as young as you possibly can and find those experts in those areas.
You got to get a different one. You got to get different.
Know how to collaborate. All right. I'll think of something new, but I still think Simon's advice is a list. So
you can you can double down on it. You can double down on it, but you throw us something else.
Well, what I'd say is this. I would say block out the noise and really sit down and think about what you want long-term. Start to think more about the future and a little less about what you're going to do today, and stop comparing yourself to others. That's what I would say as a ticket for advice. And then between you and Jason, I don't know, he might talk to you so much that you'll be confused and forget that you're even in a fight. And so I might give it to him on that.
Preet, what's your advice for us?
My advice, if I were, to go back to being 25 years old and forced
knowing everything you know now.
Yeah, I would say that You should focus on the process and the process that you bring to planning, and product is so secondary to that. And it ties into, what it is that you can provide for clients. You can't promise outcomes, but you can promise process. And it's that process that is the key to really good financial advice relationships with individuals. So focus on the process.
Excellent advice. Excellent advice, gentlemen. And who's your 10 stacks going on?
Just to change things up, I'd say Jason every day of the week and twice on Sunday.
Yeah, he's got martial arts, so chuck me around. But maybe we'll have to switch it up, and I'll have Pocket Finance sponsor a Royal Rumble, and I'll have him be the first guy in.
Nice.
We should have Simon. Simon's black belt too, so that'd be an interesting one.
Well,
he could be your proxy.
I do want to quickly plug each of what you guys are doing. I'll quickly plug Simon and Nick. I want to make sure we speak properly to WealthScope and MoneyGaps. So I'll quickly get you to just promote those and just where people can find them and what they're really offering. Nick and Simon, beasts in the wealth advisory space. You've got they still look young, but they've got enough years under their belt that they're very savvy guys. They're tenured in the industry, but a lot of years ahead of them. So anybody looking for financial advice or wealth management, financial planning, these guys are amazing. Please do go follow. You're playing yourself if you're not going following anything that content that Preet is creating. Absolute privilege talking to you today, Preet. I really enjoyed the conversation. I hope someday we do get to chat about philosophy. Anyone here know who Lex Fridman is? Anybody, please? One person? Okay. I was on Clubhouse the few times I was on there, and I was in a conversation with Lex. Yeah, exactly. It was that voice note social media. And Lex Fridman is in there in a group of people talking about free will versus determinism. And after I jumped on and made a comment, he followed me. And I've never been anything to a celebrity. I never looked up to Michael Jordan. That was like my moment in life. I ran over to my wife. I was so excited. I'm a little fanboy. But yeah, plug what you're doing for us, Preet. Thank you so much for making any time. We're all working hard to get time back in our lives to do what we want with it. So to give us any of it, super, super grateful.
Well, thanks very much. I'll just very quickly say that moneygaps.com, it's software for financial advisors who want to provide higher quality advice to the mass market. So it's a tool that is trying to make it more scalable to make it economically feasible to do that for advisors. WealthScope.ca, the portfolio analytics software, very advanced portfolio analytics software. Check that out. There's some interesting stuff we're doing there in terms of retirement drawdown simulators. And I also want to plug FAIR Canada. So I'm chair of the board for the Foundation for the Advancement of Investor Rights Canada. We are always advocating for investor rights, trying to make the industry a better place and fairer for investors. So check that out at faircanada.ca.
Then we'll also thank you for your service for consumers because, with the Canadian Bankers Association and all these other entities that have all kinds of interesting advocacy, it's really important to have people like yourself out there doing those things. And I will say that those technologies and platforms that you work with, the MoneyGaps and WealthScope, UI, UX is beautiful. It's simple. It's affordable. Check it out. We'll be promoting it on the Finance Village community as well on our website once we launch. And I just want to thank all of you again. And Preet, hope to talk to you again someday soon.